Monday. What's up, everybody? Wednesday morning. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope everybody had a great Monday as we saw the markets come down pretty hard on Monday. Really not overly surprised. We talked about the down, the fact that the markets were going to come down a little bit on Monday. And the other thing that we try to talk about was stay calm, right? Stay calm because Tuesday, most of it came right back. We're not all the way back. I think close to our all-time highs as of yet, but we're closing in on them, and so we're going to take a look at those today. So let's go ahead and dive in with the big picture. So starting first with the big picture, we have the S&P 500. Now, if I move this to a daily chart right quick, we can see that we had the big red candlestick from Monday's price action. But note the really, really large wick that we have down here. Now, we talked about the fact that this was our daily area of demand where we did anticipate potential for a bounce, and that being the most high quality demand area because old resistance acts as new support. So we are getting a bit of a bounce off of that particular area and that particular level. So looking at this on the 1 hour chart, where are we looking at for our next potential turning point? Well, we can see that we had a few areas of supply right through here. The 15-minute level actually held for a little move down. But as we start to come back up, gauging what this looks like on our 4 hour, we haven't really put in a higher swing high as of yet, right? We had our big move down, but still not put in a higher swing high. And so our next area of potential reversal on the hourly chart for our short would be this one right in here. Now, this would be the area, and it's a good clean level. Well, Chuck, what's the problem then? Well, notice we had basing before the level here. Pulled down. We've come close to the level without getting in to that particular area or that particular level. And so while this level is a clean level and still valid, if you think you want to take it, it has to be a confirmation entry area only, because we've come close to it without really getting in or without really getting filled. Now, as far as demand goes below us, we had these two really big candlesticks on the strong move up. I would look to this little level right here, which is this little wick over wick unbalanced area down here, 42.88. The next one to take a look at would be the NQ. And so looking at our NASDAQ, also a big move down. Now, this one I was really, really kind of hoping, frankly, we would get a little lower. It did not get in as low as I wanted it to. Our daily chart shows a better, cleaner picture of this area of demand where I thought our daily chart might have a chance to make it down to this level right there. And then certainly the hourly is the smaller zone. Didn't quite make it all the way down. Still, that level is fresh and fairly clean. But on the hourly chart, we started to make our way back up. Now, interestingly enough, is that on our 4 hour, we haven't come above this swing high. So coming above this swing high is going to be important for continued movement back to the upside. That's above that 14,871. And so we're now just kind of basing a bit sideways. On the hourly level, the fact that we've put in these two wicks that popped up into this region and we're putting in a little lower high right here on the hourly chart is a little bit concerning. There is a small zone right here that was formed yesterday morning. I'm a little bit more concerned with this level. I don't know that level is as great based upon the fact that we almost touched it and couldn't get in. I think yesterday that was a good level. Today, not quite as much. So, it's a good wick over wick area, fairly clean zone on the hourly chart, but I don't like it as much. I think that I would look to see if we break above these highs, right? with a bit of basing just in front of that level if we, pop above there. But that's 76 points from where we are right now. So that's still pretty far away. The Nasdaq is down 20 points this morning, while the S&P is up 10. So let's go ahead and take a look at crude oil. So crude oil has rebounded a little bit after putting in a bit of a bottoming pattern, and we had a fair amount of demand areas over here to the left. If we look a little further to the left, you had a couple of demand areas here where we saw a couple of bounces, and then off those areas of demand, it's really setting up for the next level of supply, which is this area here. Now we had both of these levels identified. The level below here at 68.82, and then the level above here at 69.60. I like the higher level better. A little bit more. It's a little cleaner level, a bit closer to the pivot. I like base drops below the pivot highs. And so still a valid potential entry. On a 4-hour, our trend has not changed, right? This would just be a rally back up into a potential reversal point for price to be able to drop. If that level falters on our 4-hour chart, this is actually another really, really clean level. So this one shows up on the 4-hour a little bit cleaner than it does on the 1-hour. On the 1-hour, it's not quite as clean. On our 1-hour, we might want to just take the actual pivot. But the pivot itself is a really clean level on the 4-hour time period. So if you're a bit more conservative, what you can do is you can take this lower level as a confirmation and the upper level as a limit. Okay, and then last, let's go to gold. Gold on our 4-hour is we've begun a bit of a rollover through here, but we're still between quality areas of supply and demand. When I look at this on the hourly chart and I look up for quality areas of supply, right? This is a retest of this area here to the left. So there's really nothing super close to me that I like for supply. How about demand? Well, that's certainly not going to be great demand, and that's a little bit of it's all just yuck, right? So this to me is an opportunity to not force a trade on gold. Maybe if you're an options trader, there's an iron condor somewhere in here. We could take a look at potentials for an iron condor that expires on Friday, do a weekly version of an iron condor, and that may be a decent setup and a decent trade looking forward. So as far as today goes, I think today is really a day for patience. Wait and see where the markets go. Based on where they go, maybe set yourself up for a potential entry, either long or short, because we've technically not broken out of the downward trend with our 4-hour chart because we've not put in a higher swing high and a higher swing low. And so shorts are still very possible. The long exists on breakouts above pivot highs. So today's just it's a great day to be cautious and to not force trades. All right, so that's all I have for today, everybody. If you guys have any questions, as always, send us an email, support@tradersarmy.com. Till tomorrow, I'll talk to you soon. See ya. Hey, thanks for joining us. If you like what we do, please make sure you hit that subscribe button. It's the only way the computers know that you're actually alive and really care. And go to tradersarmy.com today to learn a bit more. And if you want to see some of our other videos, click here in the box.